Hi, everyone, and thanks for joining us today. My name is Raj Lalla. I'm the CEO of Evolve ETFs, also joined by Elliot Johnson, who's our CIO and COO at Evolve. And of course, the guest of honor is Tyler Winklevoss, who I think many of you don't need much of an introduction to. But first of all, Tyler, thanks for joining us.
Yeah, no, thanks for having me.
Exciting. For those of you not too familiar with Tyler, he's the co-founder of Gemini, which is a digital asset exchange and custodian, and also the sub-custodian for our Bitcoin and our Ether ETFs. Tyler graduated from Harvard with a degree in economics and then an MBA from Oxford. He represented the US in the Beijing Olympics in 2008 and began investing in Bitcoin, I believe, in 2012. And then I think he launched Gemini in 2015. Definitely makes us feel like underachievers. But congratulations on all your success and thanks for being here. Just as a quick introduction to Evolve for all of you, we are one of the fastest growing ETF providers in Canada. We're managing right now about $1.8 billion. We've really emerged as leaders in disruptive technology or disruptive innovation. We've launched a lot of firsts in Canada: first cybersecurity ETF, first auto innovation ETF, first e-gaming, first cloud computing, one of the first Bitcoin ETFs, which is EBIT, and the first Ether ETF, which is ETHR or Ether. So maybe we could kick things off, Tyler, by you've obviously been dealing with us Canadians for a few years now. What are your general impressions of Canadians as individuals and companies?
Yeah, well, no, I'm a big fan of Canadians. You guys happen to be good rowers. So I rowed with or against many Canadians, either in the juniors, at college, the Olympic level. So you guys are fun. I'm fans, but also a fan of the fact that the regulatory environment seems to be a bit more open to Bitcoin and Ether ETFs. In the US, we currently don't have any ETFs live. So I think we're about a year behind you, believe it or not. So as a lover of crypto, as a lover of Bitcoin and Ether, fantastic to see the Canadian regulators get on board with these products and bringing them to market. Obviously, not only as a Bitcoin hodler or investor, but also as a co-founder of Gemini, our custodian exchange. We service your ETF and actually all the other products that are regulated and trade on the Toronto Stock Exchange in Canada. So when I put my Gemini hat on, I like it even more.
Yeah, it's actually a good point. I mean, the news came out yesterday that the SEC is pushing any decision out to mid-June. Do you take that as a signal that they're getting closer, or do you take that as a signal that we still have a ways to go? You mentioned a year, maybe longer. I don't know. Everyone seems to have a different opinion.
Yeah, I think probably the most positive signal is the changing of the chairperson. So Gensler, who I've not met, but I've done a little bit of research. My understanding is that he's definitely a student of crypto, is a fan of the technology, believes in it, is even a professor of crypto, because I think he's lectured at MIT.
Yeah.
And when I've read through sort of like presentations, he has a good grasp of the nuances. It's not just like, oh yeah, I believe in Bitcoin, but really understands the different properties and merit of it. So I think that's really positive. And so I've always thought in the US that a Bitcoin or Ether ETF was a when, not an if. But I did believe that that wasn't going to happen under Jay Clayton, the previous chairperson. And so I do believe that when will happen with Gensler. And I think that could be, you mentioned that the timeline has been moved out to June. We probably won't see something until, like, I think Q4 is the fast train. But I do think it's coming, and I don't think it's going to happen at the end of his 4-year cycle, if that's how long he decides to stay.
Right. So that's actually a good point to dovetail. I mean, for many of the Canadians watching this interview, you may know that we actually filed for the first Bitcoin ETF back in 2017, and the regulators just weren't ready. It was a very different time. There wasn't much infrastructure around Bitcoin. There wasn't as much adoption that we've seen over the last few years. Maybe I'll flip it to you, Elliot, and then come back to Tyler in a second. But you want to provide some commentary because you and I have been very closely working with the regulators to get the approval for one of the first Bitcoin ETFs. What, in your opinion, got them there?
Yeah, I think it's an underappreciated part of the story of the successful launch of cryptocurrency ETFs in Canada, just how relevant the infrastructure is that's been developed over the past 4 years since we first started talking to the regulators here about launching a Bitcoin ETF. Our ETFs track the same price index used by the futures market, which is really important because we now have a derivatives market as well as a cash market for both Bitcoin and Ether, which is an important building block of the overall financial industry in terms of being able to have both markets operate in an orderly fashion. That really helped with our conversation with the regulators to say, you know what, there's going to be liquidity here for the market makers of our ETFs to be able to ensure that there's good price discovery for investors, that investors, when they buy the ETF units through the day, are going to get an accurate price based on the Bitcoin that's held inside the fund, for example. But it also, that piece doesn't operate by itself. It allowed us then to also, by partnering with Gemini, be able to demonstrate to the regulators that we can actually meet counterparties that have been KYC'd and audited by Gemini. So we know that we're not facing any entity that is not an approved entity. And also it allows us to meet those entities at Gemini when we're buying Bitcoin and deliver cash versus the Bitcoin itself. And that delivery versus payment mechanism that exists in the equity world and has been around for decades is only really possible when you have a world-class custodian who's able to put in place those things that allow financial products to be built on top. So this is a lot of technical plumbing that I know kind of bores some people, although I find it personally exciting. But it's the stuff that actually has brought us forward to the point where we can build reliable financial products on top of cryptocurrencies. And that, I think, is the most exciting thing happening right now, because this is opening up participation in Bitcoin and Ether to a much wider range of investors who have been interested in them, haven't known how to use them, haven't known how to do it safely, and now have a lot of more solutions at their fingertips than they had before.
So Tyler, you guys have been very instrumental into the overall improvement of the infrastructure around Bitcoin through your custody business, for example. Can you talk a little bit maybe about the last few years in terms of the challenges that you faced in terms of building out Gemini?
Sure. So we got into Bitcoin in 2012 and bought a lot of Bitcoin actually on Mt. Gox, which famously imploded a few years later. Luckily, we didn't lose any Bitcoin. We had moved our Bitcoin off, but that really informed us, back to Elliot's point, of just how shaky and not enterprise grade the infrastructure was. And we looked to invest in companies trying to fix that solution, but nobody really believed in, people believed in a better product and more security, but they didn't really believe in regulation, in licensing, in sort of going through the front door of the licensing compliance aspect. And so we couldn't really find a team to bet on. So we said, you know what, sure, we're gonna have to do this ourselves. So we picked up the phone with the New York state regulator, the New York DFS, said, how do we get licensed to do this? And they said, well, to do what you want to do to service both retail customers and institutions, you're going to have to become a New York Trust company. So we embarked on a 1.5-year licensing process to become a New York Trust company, which culminated in us getting that license and then launching in October of 2015. And it's pretty rare for a startup to launch, but with that, you have a business continuity plan, you have internal controls and procedures. We have a bank exam every year with 5 bank examiners who come to our office and make sure we're doing what we say we're going to do. We have BSA AML audits. And 7 board members on the trust company. So it's very, very heavyweight. We also have to do yearly security penetration tests. And ultimately, we also have a SOC 1 type 2 and a SOC 2 type 2. The SOC 2 type 2 is around the security and internal controls and procedures. The SOC 1 type 2 is around financial reporting and things like that. But those are the highest level of sort of exams, and those were performed by Deloitte, and they're longitudinal, and we refresh it every 6 months or a year to make sure we're actually following the things we say we're doing. So we've really worked very hard to build this constellation of trust in Gemini with outside parties, independent auditors, and whatnot, to get folks like yourselves, but also the regulators comfortable with Gemini being a custodian of a regulated fund that trades on a stock exchange. So it's been a really interesting long journey. I didn't think I was going to be the CEO of a trust company necessarily, but we really believe thoughtful regulation. When you get regulation right, it builds the most vibrant, healthy markets. I think you can look to Singapore was a fishing village not long ago, and with thoughtful financial regulation, it's become a powerhouse, a hub in Asia. In fact, we are in flight in a process to license with their regulator out there as well. So they're embracing crypto as well. So you can look to the economies that you respect the most, and they have thoughtful regulation. Right, too much stamps out innovation, but too little, you find yourself in the Wild West, Mt. Gox days. And so we felt, I guess in a way, we started Gemini to solve our own problem. We didn't want to lose Bitcoin on an exchange, we wanted to trade it. And for this technology and movement to really take on, it needed better infrastructure and it needs more access points. So with our license, we could get a bank account so people could wire cash in. With our license, we can help you and Frugal in Canada so someone could get exposure to Bitcoin through a security, which a lot of people need. That's the route they get into. They can't hold Bitcoin the asset or Ether the asset on Gemini. So it's great to see the fruits of our labor paying off and realizing that vision of you can just open your brokerage account and buy EBIT or whatnot and get exposure to crypto. That's a huge, in our opinion, that's a big game changer, because a lot of the funds, pension funds, sovereign wealth, they have to hold a security. So this is the only way they can get exposure to that asset class.
Got it. Let's shift gears and talk about adoption. Over the last year, we've seen hedge funds starting to use Bitcoin. We've seen institutions starting to invest in Bitcoin. We've seen companies like Tesla, of course, invest. I believe they just upped their investment to $2.5 billion. That just got disclosed maybe today. So we're seeing more and more use case for Bitcoin, whether it be store of value, whether it be cash alternative, gold alternative, or just an asset class in general, the digital gold. You're probably having a lot of conversations with corporates, with institutions. First of all, what's resonating with them in terms of adoption of Bitcoin, and what are the concerns that they have, or what's preventing them from actually adopting Bitcoin within their portfolios or their companies?
Yeah, it's a really interesting question. And so I'd say that the concerns are really melting away. So I think the biggest driver to Bitcoin right now, the reason you're seeing Square put Bitcoin on its balance sheet and Tesla put Bitcoin on its balance sheet, is because of the money printing that's going on in fiat currency regime. US dollar, euro, pound sterling, I imagine the Canadian dollar as well. We weren't very conservative and tight with our money policy for the last decade. And then all of a sudden COVID hit. And so there's an economic shutdown. How do you sail your way through that storm? You print more money. The problem is we've been printing money for the last decade before. So it's the specter of inflation, the fear that inflation is coming, really push people into Bitcoin, in my opinion. we saw a lot of dyed-in-the-wool Wall Streeters who kind of got close in 2017, 2018, but just couldn't quite get off the diving board into the asset class. The same people, there was a crypto winter for a period, and then when COVID hit, the markets melted down, and then they started rebounding. As soon as people could take their head up for air, they came running back to Gemini and said, how do we get Bitcoin? It wasn't like, tell me about Bitcoin, prove it to me. They totally got the gold 2.0 thesis, the same rationale that Paul Tudor Jones, he calls it the great monetary inflation. It doesn't take a rocket scientist to look at the Fed balance sheet and assess how it's ballooned, the level of debt, the stimulus spending. It's simple arithmetic that a kid in elementary school can understand, the supply and demand. And so even these, Wall Street, the biggest skeptics, biggest cynics, became completely spooked with what's happening with the Fed, the Treasury, and basically the US dollar and its long-term viability. And if it was the 1970s, they'd be buying gold, but we have Bitcoin. So they started buying Bitcoin. So I believe ultimately it's two things. People believe that Bitcoin is gold 2.0. When you look at the characteristics that make gold valuable, that we all agree make gold valuable for the last thousands of years, scarcity, durability, portability, there's about 9 money characteristics. Bitcoin matches or defeats gold, or does better across the board. It's actually a fixed supply. It's portable as an email. It's fungible. You can divide a Bitcoin into 100 million pieces. And so it's ultimately gold 2.0. The market cap of above ground gold is 10 trillion. Gold is 1 trillion. So there's a 10x from here if it disrupts gold. That would put a Bitcoin price conservatively at $500,000 a Bitcoin. And if that's the case, you also have the money printing happening. And so Bitcoin is actually the world's hardest money, soundest money, and greatest hedge to the oncoming inflation. And that is the biggest story for Bitcoin. That's why it's been such a strong winner this year. And ultimately, I think will be not just the best performing asset of last decade, but also this decade, because the money printing, it's just not going to stop. I wouldn't hold my breath on that.
Yeah, I would agree with that. What from a risk perspective, I mean, when we're talking to investors about Bitcoin, one of the concerns that comes up sometimes is government intervention. How concerned are you about that?
Not at all, actually. So I feel like if we went back in time to 2013, there was hearings on Capitol Hill. Silk Road was out there. There was a lot of incorrect narratives. And I would say it was maybe slightly an open question, but it was still a tough question because you have to basically shut down the internet to stop it, which means you shut down the FANG companies, the biggest drivers of the US economy. Ultimately, fast forward to 2015, we're given a New York Trust Company license, which is an endorsement from New York State. We now employ 400 people. So you'd have to kill our business to, roll that back. There was a CFTC enforcement action called the coin flip action or order in 2015, which called Bitcoin a commodity like gold. It was upheld in federal court systems multiple times in the U.S. I think the cat, or the toothpaste is out of the tube. It is never coming back in the U.S. I think the same is the case in the UK. I think in Canada. I think in Singapore. In many other jurisdictions, I would add Europe as well. So just to give you a sense of our licensing, we're in flight in Singapore. We have a license in the UK. We're in flight in Ireland for all of the European area. Obviously, the US, in Canada. So all of those jurisdictions have embraced this technology. I think the idea of waking up and having any one of those jurisdictions say Bitcoin is somehow outlawed, I mean, it's never 0%, but it's close enough to zero where I feel like I sleep very well. I do not wake up worrying about the legality of Bitcoin or crypto and the longevity of the business? I think all of those questions are asked and answered. Now you have people from the crypto industry who are also now in government. Like, people just use this and they believe in it, and that's becoming like everyone. It's not just like the crypto niche community and then the lawmakers and whatever. It's everybody's into this now.
Yeah. Let's talk about use case, because and I've mentioned Tesla already, but Tesla was one of the organizations that recently announced that you could buy Teslas with Bitcoin.
Yeah.
Where do you see this going? Do you see more companies adopting the use of Bitcoin to transact product or purchase products? And what do you think is the missing, if there is any, missing infrastructure in order for organizations to actually truly start using it?
So I think that the play for companies like Square and Tesla is really against inflation. You've got this cash happening. You're hemorrhaging value. Like, we know what happens if you put cash under your mattress. You're losing money overall. It's a bad place to store your life force. And you need to look at how you measure inflation. I don't measure it by CPI. I look at asset prices. I look at the fact that real estate price records are being broken every other week or day or month. Look, the fact that the stock market is absolutely ripping when the world is, Main Street is shut down and not doing well as very related. So I think inflation's a lot higher than you hear on the, you hear maybe like in the news. I don't think it's the CPI measure. So if it's 10% or 15%, you're losing that a year by sitting on the cash. So it's really like these companies trying to put their cash to work in a way where they don't completely hemorrhage and lose value. And it could be gold, but for the reason I mentioned before, I think a lot of people are looking at Bitcoin as that sort of hedge. There's something like 40,000 publicly traded companies globally across the world in different exchanges. That number could be a little bit higher, a little bit less, but call it like around 40,000, right? There's only 32 of those companies that have Bitcoin on its balance sheet. And so do we think that number is shrinking or only growing? And I think it's growing. I think you're going to see Fortune, 500, 1,000. I think every company is going to have Bitcoin as a treasury play in their asset. And ultimately, like, I don't think Bitcoin needs to be used as a currency for it to have value, just like gold is not used to buy a cup of coffee. If it's a store of value, you want to hodl, you want to hang on to that. I think accepting Bitcoin is really smart, because if someone's foolish enough to spend it and give it to you, then they're overpaying for, your Tesla or whatever. We've all like made that mistake early on, buying something with Bitcoin, and then you see the price go up and you're like, oh, I paid 20 times more for that than I needed to. I don't think
is that guy that bought the pizza, what was it, 2011, 12, that's now worth 500, he used 10,000 Bitcoin. Is that an urban myth, or is that a true story?
So that's true in as much as it's on message boards. I think the guy, I forget the guy's name, but he's an engineer. I think he's even said, confirmed it, but that's totally true. And at the time, he spent like 10,000 or 20,000 Bitcoin
10,000
on a pizza. And so you don't want to be the Bitcoin pizza guy. I think of Bitcoin as, in your gold category. Ether's different. It's the digital oil of the world's global decentralized cloud computer. So if you think of Amazon Web Services as centralized cloud computing, Amazon S3 buckets as centralized storage, crypto networks are trying to decentralize all these centralized internet companies, and Ethereum being your decentralized cloud computer. And Ether, instead of using your credit card to pay Amazon for its compute service to run your application, you run your application or your smart contract, it's called smart contract, on Ethereum, and people pay for the computing in Ether. And so that's why we kind of call it a digital oil. But Ethereum is really exciting because so many applications can happen on it. So there's this whole movement called decentralized finance, where all these financial applications are being built on top of Ethereum. Even the NFT movement of digital collectibles, a lot of it's happening there. But by owning Ether, you sort of index that whole exciting world, that full stack that's happening, because Ether it's the base layer M1, layer one of Ethereum. So if you, instead of having to pick all the resources up here on what's happening, do I get this coin or this, whatever, ultimately it's a rising tide that's going to pull up Ether. So between owning Bitcoin and Ether, you have a ton of your bases covered, or at least it's a very good way. I think of, even though the whole industry is very new, these are your blue chip, assets. And when I'm talking to folks of like, how do I get in? Well, it starts with Bitcoin, and then it quickly moves to Ether, and sort of get those bases covered. And you can always go into other coins first, but that's kind of, to me, those are kind of like the starting points.
Actually, that's a good one to also flip over to you, Elliot, because we get that question all the time from investors. Can you explain the key differences between what Bitcoin is and the opportunity versus Ether? I think Tyler covered it, but you want to give the perspective from what we're providing to investors as well?
Yeah, maybe just to touch on a few things that Tyler mentioned about adoption, because we've had a lot of conversations with institutions, big institutions, who are looking at our products since we brought out our ETFs. And I would say a few things. First of all, to echo the same comment, we're not doing a Bitcoin 101 conversation with any of these big institutions. They come into the meeting with a huge amount of knowledge and understanding that I don't think they had sort of 4 years ago. I think it's been they've been quietly in the background learning about these assets. Those institutions are kind of saying to us that they think about Bitcoin in their digital gold bucket in their traditional portfolio allocation. So it's pretty easy to slot it in there. They already know about gold. They've been using gold for the past, however many decades, and they can just now allocate Bitcoin into that bucket. But interestingly, they look at Ether and they understand it from a venture perspective, because these large institutions are also used to buying private equity funds or individual positions in companies, particularly Silicon Valley companies and those kinds of things. And they look at Ether and they go, this fits squarely into that. So even though both of these assets are new assets, the understanding of what they represent is, I think, well developed by institutional investors. What that then does in our conversations is it leads them to the point where they say, okay, fine, so how do I use this in my portfolio? And that's where we've had conversations relating to our ETF, because it's really opening access to those investors to enter the space. Because in a lot of cases, these are institutions that have some pretty rigid investment policy requirements in terms of the things they can hold. So they can hold stocks and bonds, they can hold ETFs, but they haven't updated those policies to reflect direct digital currency holding. So they're not yet at the point where they're calling up Tyler to get an account open at Gemini to directly hold their own crypto. I think those days will come, and they're probably already happening, and they'll come in much larger numbers. But what they now have is access point vehicles. And so they're looking at ETFs and they're saying, okay, well, how does your ETF work? Is it actually wrapping Bitcoin? Is it actually wrapping Ether? Tell us about the actual structure of the ETF. How do you do that? And that's where we can get into the model that we built, where standing on top of Gemini's ability to meet payments of cash with actual cryptocurrencies, we're able to trade at the price point used by the futures market and have extremely good tracking. We can always be 100% deployed. We don't have slippage in our portfolio, and they understand that structure because they've been using similar structures in their business for regular custodians for equities and so on for a very long time. So once they get comfortable with the structure, they already know how they want to use these assets within their portfolios. And now that really brings a new class of investors to the table that weren't there before, but have obviously been interested in looking at it. Because again, these are conversations we're having where like I've just been blown away by how much knowledge they have. And just one final thought. We've talked about Tesla. Tesla has been more important to Bitcoin, in my opinion, than they get credit for. And the reason for that is because Tesla is in broad indices like the S&P 500. When you talk to investors and say, are you thinking about Bitcoin? The answer now is, well, we have to because we own it, because we own the S&P 500, which owns Tesla, which owns Bitcoin. That means that you no longer have investment committees who can sit there and put their blinders on and say, I don't want to know about it, I just want to ignore it. They can't. They've got exposure. That then leads to, well, if I'm going to have exposure, I better really know what it is, and I better make sure I'm allocating to it proactively rather than just passively getting it through other equities that I'm holding. So all of this is all about this sort of, I mean, it feels like we're in an ecosystem that has just really blossomed and bloomed. It's like springtime out there in terms of the ecosystem around cryptocurrencies, I think, in the past 12 months.
Is Tesla the only S&P 500 company that holds it? Is that right?
As far as I'm aware, yes. I know, it's funny watching the news reports yesterday, the other FANG stocks were reporting, or several of them were Apple and Facebook and so on. And so many of the news stories yesterday were speculating whether or not they would disclose they have Bitcoin on their balance sheet. Now, as it turns out, they didn't. They don't yet. But such an interesting narrative in the news cycle, right? That there's more excitement about whether these massive tech giants are buying Bitcoin than there is about what else they're doing in their business. That just shows how much people are interested in this change in terms of what people are doing with their treasury cash. Like it's a phenomenal thing to see.
Yeah, I think that that everyone wants to understand it. Whether they decide to invest in it or not is a different story. But many of our meetings right now are coming from people that are not necessarily planning to allocate, but they just want to understand it so that they can talk to their clients about it intelligently. For example, hey Tyler, let's go back to Gemini for a sec. I mean, you guys have obviously become one of the largest custodians in the world with crypto, and you're expanding your business. So you've got Gemini Pay, and you also have this new relationship with MasterCard. You want to talk about both of them?
Yeah, sure. Gemini started, it was pretty much Bitcoin. Ether was out there, but it was still pretty new. So Gemini started as a Bitcoin exchange, and then Ether came along. We were the first US regulated exchange to list Ether. Then there's DeFi and NFTs. So it's obviously becoming a space, but ultimately our initial goal was help people buy, sell, and store crypto. And we've really increased those money verbs. We have this new product called Earn, where people can put their crypto into Gemini Earn and earn a yield on it. So instead of just hodling your Bitcoin on the exchange, you can actually now earn interest on it, similar to what your bank used to pay a long time ago, maybe on your cash, but no longer does. So trying to bring back yield with that product. And then we have the Gemini credit card, which is coming out, where instead of earning back airline miles or points where you don't really know what the conversion rate is or whatever, you can earn up to 3% back in Bitcoin or any other crypto we support on Gemini, and we support about 40 right now. So when you go to Best Buy, when you go to the grocery store, whenever you use your credit card, you can be stacking Satoshis, which is the smallest unit of Bitcoin. You can be stacking Bitcoin, you can be stacking Ether. There's no annual fee on the card. The rewards will accrue real time into your Gemini account. So as you swipe, you're earning Bitcoin back. You can also put that Bitcoin into Gemini Earn and earn some yield on it. So we're really trying to bring, I would say, more of the money verbs to our platform, so that people can not just come over and buy Bitcoin and go back to the traditional financial world or whatnot, but they actually stay and do more of their banking services because there's just a bit more opportunity in crypto. So those are kind of the exciting new products we've been working on. As I mentioned, really proud that we're the full custody provider. So we have Gemini Fund Solutions for fund managers, and we have all of the funds that are regulated and traded on the TSX. So we have a very strong institutional business. So Fund Solutions includes custody. We have a trade execution desk, as Elliot mentioned, and also clearing services. So all of these things, and we also have multiple user accounts. So you can sign up and make sub accounts. So that's really helpful. And each of those accounts have different credentials. So you're not sharing the same 2FA around 20 people in your firm. You build the firm account, and then each person has their individual account to log in. So a lot of institutional features that we've built at Gemini to really service the institutional industry, in addition to the retail or the individual. Crypto's obviously been for so long a retail phenomenon because regulators up until about this year, at least in North America, couldn't get comfortable with it. So people didn't want to wait around, and so they just come to Gemini or other places. But we always knew that the day would come when the regulators could get there, and so we wanted to build the institutional enterprise grade software for everyone. We think we hit that mark, and so those are kind of the big focuses of us. Like, and I also mentioned that we're in 50 countries. We're in flight and licensing in a few in Singapore, in Ireland for Europe and stuff. So we really view ourselves as a global company. We started in New York, but now we have offices Portland, Oregon, Chicago, New York, UK, Ireland, Singapore, San Francisco, LA. We're really growing, and as evidenced by the fact that we work with you folks in Canada. So we really see ourselves as a global company.
It'll be nice when the world reopens a little more. You can travel more often.
Yeah, that's another amazing thing is crypto's brought me so many great places. I think I went to Asia first time since the Olympics in 2008, 3 times in 2 years, right before all this happened. It's super exciting. It's really fun to travel with business, and sort of see the world.
We all miss it. Elliot, actually, Tyler brought up a good point, and I think it's worth mentioning. Some of the feedback that we've been getting on our fund is, especially from sophisticated investors, they love the fact that our money movement is linear, meaning going from the fund to Gemini, not to any third-party broker first and then over to Gemini, and coming back the same way. Do you want to just really quickly highlight that process, because it is a definite differentiating feature for our structure?
Yeah, it's a big part of it. The interesting thing about talking to institutions is it was similar to the conversations we had with the regulators. Everybody wants to make sure that your mousetrap actually works, and they want to make sure the risk is minimized, right? And so there's a sense that because cryptocurrencies are traded in all parts of the world on exchanges that oftentimes aren't regulated the way that Gemini is regulated, right? And there are a lot of times you can go on certain exchanges in certain countries that don't meet any kind of particular regulatory threshold. One of the questions is, so are we buying Bitcoin from kind of anywhere? Are we trading around? Are we wiring money all over the place and trying to gather up our Bitcoin and so on? And the answer is no. The real competitive advantage our structure has is that we're able to actually buy and sell Bitcoin or Ether, depending on the product, at the reference rate that is the most widely recognized rate for pricing Bitcoin in the world, which is the CME CF Benchmarks Bitcoin reference rate. This rate is the most recognized because it's been used as a settlement rate for the futures market for the past 4 years. So when you talk to the really big market makers, the folks who are trading futures, the folks who are trading spot Bitcoin on various exchanges, maybe they also trade ETFs and other things, those folks, we can call them up every day and say, hey folks, we need to buy some Bitcoin. and we want to pay today's Bitcoin reference rate. And they're willing to give us that rate without question, guaranteed every single day. And that's important because that's the same price we use to value the Bitcoin we hold in our fund. So it's one of the things about running an ETF is you want to make sure that the price you pay inside the ETF for the things you're holding is also the price that's used to come up with the value for the units of your ETF. If those two things are different, then you have internal portfolio slippage and cost that's reflected to the investor through a tracking error and through, that they don't get the performance they're expecting, and their inherent costs of knowing the fund go up. But because we can do it that way, we have a structure where we can call up those Bitcoin market makers and say, it doesn't even matter how much we're doing, because Bitcoin is such a deep and liquid market. We can say we want to buy $100 million worth of Bitcoin from you at today's Bitcoin reference rate. And they say, no problem, we will give you that rate, and we'll see you tomorrow at Gemini to settle this trade. So then the second day, when we get cash that comes from the banks that are creating units of our ETF to meet the investors who are buying the units, meet the demand by investors, we get that cash into our ETF, and we do one wire only down to Gemini. That's it. Our cash never goes anywhere else. It goes straight from CIBC Bank in Canada, where we settle our ETF creation units, down to Gemini, and to the penny, we wire down the exact amount to settle the trade that we'd arranged, because we have price certainty on our index. So this is really important to the big institutions, because they want to make sure that if they have big inflows and outflows, can our fund support that? Or are they going to find that they bring in because big institutions do very large trades, right? They want to be able to make sure that this thing can scale in size. You don't want to be in a product that can't do something effectively like that, because then if somebody else comes in a large size, it's going to affect your returns, because you're going to be paying those costs as an investor alongside the others that are coming in or going out of the fund. So by using that reference rate, combined with the ability to meet those parties at Gemini with payment for the Bitcoin, our fund is just a wrapper. If you pay whatever it is today, $28.50 for a share of the EBIT ETF, you've got $28.50 worth of Bitcoin, because the fund holds 100% of its assets in Bitcoin, and always will. Even if we get a big inflow tomorrow or a big outflow the next day, it really makes no difference. That's important to the big institutions. It was important to the regulators as well. And it's something that not all the funds have been built that way. And there are still some folks out there who are trading around trying to make sure they can hit their price point, which is not going to be as efficient. And so we're having a lot of really great conversations around that with our clients.
I've never seen anybody so passionate about operations before. Good for you. Thank God you're part of the team. Listen, before we close off, I'd like to thank Tyler and Elliot for being part of this today. This was a great discussion. If anybody wants more information on any of our ETFs, feel free to visit our website at evolveetfs.com. The ticker for our Bitcoin ETF is EBIT, and the ticker for our Ether ETF is Ether, ETHR. Before I close off, I have a fun little question to ask both of you. Dogecoin. Believer? Not a believer? I gotta say, it reminds me a little bit of what Bitcoin was like 6-7 years ago, where there was some people don't say that Bitcoin, very few people say that Bitcoin's a joke anymore, right? People are now, there's a lot of believers, but 5-6 years ago, there was a lot of people that thought Bitcoin was a joke, and I'm sure you encountered many of them, Tyler. Feels like Dogecoin is kind of in a similar camp, although it was created as a joke as well. But what do you, I'll start with you, Elliot, and then I'll let Tyler close it off. What do you think of Dogecoin?
I view Dogecoin in the same category as GameStop and these Reddit stocks, which is to say that it's being driven by online memes. I can't predict whether it's going to be worth more or less in the future, but I don't think it has taken the narrative of the serious store of value that Bitcoin has developed. And I think that adoption is just, it's night and day between the two in terms of people who are actually looking for a digital gold. So I think Dogecoin is fun. I love the fact that Elon Musk can tweet a picture of a dog on a rocket, and then the price of this thing changes. I think it's a great thing fun thing to watch. But I don't think it has any. I think it's as relevant to Bitcoin as GameStop is to the S&P 500. That's my perspective on it.
Tyler?
Yeah, I'm a big fan of Doge. I would say, like I said earlier, it's not where I'd start. I'd start with Bitcoin, understand Bitcoin. It's a little easier to grok the gold 2.0 story, really get comfortable with that. Then I'd move to Ethereum, understand the decentralized operating system of the world. And then once you kind of get those bases covered, and I would start with those as investments, that's not investment advice, but that's my personal view of what I would do. Then I think you're bitten by the bug of crypto. You have to keep exploring. And I think Doge is a really interesting philosophical question. It's the people's money. It's irreverent. It's almost as much of a protest to sort of being stopped out in GameStop as it is money. But ultimately, I kind of like the organic nature of it, the emergent money aspect versus fiat, which is down your throat. If you don't use this, like, we'll knock on your door with tanks, kind of thing. So there's a really interesting, like, it's sort of the Austrian school of economics. Money's organic. It's what we as a society or people say it is. And if we say it's Doge, then, by gosh, it is Doge. And I like Elon Musk's quote, like, fate loves irony. Bitcoin was a joke, and now it is. And he may have borrowed that from mythology, I think. But ultimately, Bitcoin was a joke, and now it's a really serious business. And so it kind of goes back to the Gandhi quote of, first they ignore you, then they laugh at you, then they fight you, and then they buy Dogecoin. But I think it starts with, then they buy Bitcoin, Ether, and then Doge. So I love it. I love the aspect of, obviously don't risk your everything into Doge, but gosh, we're having some really great conversations about something that's really important, which is money, and everybody's talking about it. And I think just the educational aspect and the financial literacy and forcing people to ask that question and wrestle with that, I think that's only a good thing.
Great. With that, I think we're going to wrap up. Tyler, thank you very much for your time today. Thanks for being such a great partner. I got to say, working with Gemini has been truly a pleasure. Obviously, Elliot has worked closer building out the operational platform, but Dave and Brian have been phenomenal to work with, and your entire team. So congrats on all your success and continued success, and hopefully we get to do this again sometime.
Yeah, no, thank you, Raj and Elliot, for the conversation. We love working with you guys and hope to continue to work close together and continue to explore this amazing frontier of crypto.
Great. Stay safe, everyone. Thank you.
Thanks, everyone.
Thank you.